last night, Jensen took a leap to go much deeper with physical AI, including making humanoid robots and taking autonomous driving to the next level. As Jensen said, quote, everything that moves from cars and trucks to factories and warehouses will be robotic and embodied by AI, end quote. To me, that sounds like the agentic economy, where we have digital agents that can do all sorts of things for us, and it's all NVIDIA. The world will never be the same if this happens, and after last night, I think it's happening much sooner than expected. That was the takeaway. Jensen talked about the possibly relevant AI PC, something that's been considered a bust. He mentioned several uses for Apple's Vision Pro for healthcare and gaming, another alleged bust. Plus, there are all new clients like Toyota, that may want to build out a network using a supercomputer brain in one location and then a brain on board. I know that just sounds like a press release, but if Toyota, a well-capitalized company, decides to build out a Tesla-like autonomous driving system, it's going to have to buy hundreds of thousands of NVIDIA chips. That's good for business. Very additive. Now, there are always people, plenty of people actually, who own NVIDIA for the long term, like the Trust does. They should be gratified by all these very important announcements. But there's also a huge group of people who own NVIDIA because it goes up, often by a lot. And the stock went nuts going into and immediately after Jensen's speech. These people, many of whom buy call options, not common stock, don't know enough about the company to stay in it when the stock starts selling off. I'm sure they didn't watch the keynote or read the blogs, and they're just in it because of the momentum. When the momentum turns, they turn too. Sell. To me, this is business as usual, people. While I may not know all the exciting specs that Jensen talked about, as I see it, he assured you that the new industrial revolution is alive and well and coming to you in a very short time. In my eyes, NVIDIA stock was brought down not by anything lacking in CES, but because there was too much hot money in the stock.
Investors in Nvidia stock received some bad news. Two pieces of information really caused the share price to drop by up to 4% as a result of these developments. Now let's get started. In this video, I'll go over each of these changes and what they can signify for investors in Nvidia stock. According to information released on Monday, top customers are delaying orders for the newest Blackwell racks from AI chip leaders because of overheating problems. If you are unaware, Nvidia's top customers at the moment are Amazon, Microsoft, and Meta platforms. I suppose you could also include OpenAI ChatGPT with Microsoft. These companies are Nvidia's top clients at the moment, and they are building out these AI-optimized data centers. In fact, according to the company's most recent earnings release, cloud service providers like the ones I just mentioned account for about half of their data center revenue, with the remaining portion coming from consumer internet and enterprise companies. In other words, these big tech companies, which include Microsoft, Amazon, and OpenAI, make up 50% of the company's revenue. So if they are delaying orders, it could have a significant negative effect on the business. Having said that, Nvidia is nearly sold out of its most recent Blackwell technology for the next 3 or 4 quarters. If the top customers start to become picky, there are still customers waiting in line to take those chips away. This is not a good sign, especially since Nvidia recently announced that they will be launching their new technology every year instead of every 2 years. However, management has stated that there is a waiting list of customers who are in line to get their hands on these chips. So, if there are cancellations or extra supply on hand, there are customers ready and willing to take those up. So with this increased speed, you can anticipate some problems like this. The hope was that they could handle this without any issues because they have been able to scale the business almost seamlessly, and the growth has been exponential. Their revenue has increased by 200% in some quarters, which is particularly difficult for a company that primarily sells hardware. It is easier to increase sales by 200% if you're selling software or a digital product that doesn't require the logistics or manufacturing of physical things, right? So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video. Imagine expanding your business by 200%. When you're selling physical goods, you have to make a lot more things, ship them, import and export them, and deal with the dates of shipments. Because of the increased difficulty, you don't see this happening very often in the selling industry. Instead, it occurs more frequently in software companies or businesses that sell digital goods. And you would expect to see more challenges like the overheating issue we're highlighting today. And you're trying to do this now where you were previously used to updating this technology every 2 years. At the same time, you're experiencing this tremendous growth. So, what Nvidia has been doing is something very difficult in business, and they've been doing it almost flawlessly over the last 2 years. so you can understand why the stock price has increased by this much. It was doing something very difficult, and it was doing it almost flawlessly in a market where demand was soaring, which is one of the reasons it's found great success. Even though this isn't good news, I was expecting something like this, some sort of step back from Nvidia, and this hasn't been confirmed yet, so this is just reports from the information Nvidia hasn't confirmed. If you're working at the highest level and you're barely able to do it, that will probably mean your competition will have an even greater difficulty, because this isn't their core skill and it's not what they've been investing in for the past 20 years. Actually, there were reports of these overheating problems a few weeks ago, but the CEO of Nvidia denied them, so this is still a developing story, and we won't jump to the conclusion that they do have problems. Alright, let's move on to the second piece of news that caused the stock price to drop today. The US government also stated earlier in the day that it would further restrict exports of AI chips and technology, which could potentially hurt Nvidia's sales. These export limitations to China had already negatively impacted Nvidia's revenues in prior quarters. Thus, this had already harmed the company's operations. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video. Additionally, this will hurt the business even more. Let me elaborate on how I mean this. I don't think it will hurt sales, as this report suggests. Rather, I think it will hurt the business by making it more concentrated, which means that its sales will be less geographically diversified and more concentrated in certain regions, such as the United States and countries that the United States considers to be very strong allies. As I mentioned at the beginning of the video, demand for Nvidia products is extremely high, and there is a line to get their hands on Nvidia products. Therefore, if Nvidia is unable to sell its products to a particular country at this time, there are other countries that are waiting in line to buy Nvidia's products. However, this will make the company more concentrated in fewer regions, which means fewer customers and fewer products. This increases the risk of your business because you are now depending on a smaller group of buyers for your product, and if they decide to cut back on their purchases, it will have a more significant effect on your business. In the event that market conditions change, those customers may eventually have more negotiating power against you because they have no other options. As a result, those customers may decide to return to Nvidia. For example, if the market for Nvidia products cools down in 2 or 3 years and those restrictions remain in place, those customers may be able to exercise more negotiating power against Nvidia, and Nvidia may not be able to obtain the premium prices it has been able to secure over the last 2.5 years, which has resulted in a boom in both revenue and profitability. Even though Donald Trump has been taking the oath and the stock is rising, these are significant events and undoubtedly good news for Nvidia stock investors. Nevertheless, I do not believe that this is a reason to sell the stock. I continue to believe that this is a great company and an excellent stock, even though this is obviously bad news. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.